they thought I was an idiot. But honestly, it wasn't a well thought out decision. At some point, when you play with something, you might just have an idea hit you. And the idea that hit me was, oh my God, this DeFi, like it looks like it's real.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Evgeny, thank you so much for joining me today. Super excited to chat with you. All right, Evgeny, you're the founder of RE7 Capital. RE7 is a research-driven digital asset investment firm specializing in DeFi yield and liquid strategies. You manage roughly $800 million across your various strategies. Previously, you worked at places like Deutsche Bank, UBS, Griffin Capital Management, and at the blockchain startup Everledger. All right, so Evgeny, we've known each other for, I think you're like 5 years now, roughly. And when you were first setting up RE7, I think it was extremely non-consensus because back then it was really all about venture, crypto venture. And you were telling me, I'm going to do this kind of market neutral strategy and the kind of more yield focused. And I remember you're telling me kind of the yield profile. I thought it was insane, to be honest, because I was like, wow, what types of LPs are going to be interested in this kind of slow and steady yield? It turns out a lot of people, but I figured that everyone who was interested in crypto would be more focused on, the 100x opportunities. So I guess take me back to the initial stages of getting set up with RE7 and kind of your evolution from going from TradFi to thinking, okay, I want to launch my own firm and I want to launch with these strategies.
Yeah, absolutely. And thank you, Andrew, for having me. Very excited. And it's been about 5 years since we've known each other. We've come a long way since the early days of DeFi and NFT world. As you pointed out, I come from TradFi. So as I was working there, I started playing with space just personally, like all of us have. Eventually, I kind of jumped into a blockchain startup. But when I saw DeFi in 2019 and 2020, it was very, very clear that this is finally, at least for me, it was the final aha moment where it wasn't just, the story where, the promise of the bright future. It was actually something real and something you can touch and play with and actually do things with. And once I was playing, okay, I finally feel this is the right time to bet my career, my life, and basically everything I have and my soul, on crypto. And the question was, how do I do it? What do I do? And the first instinct, as you pointed out, is, hey, I'm in crypto because I'm on 100x, so I should do a venture thing. And then, luckily by that point in time, I knew, we knew each other at the time. I knew some other people, and I looked around and I realized that there are very smart people who are extremely well specialized within either a category or they just come from venture. And I realized that I'm not going to have any edge if I go and compete against them. And the thinking is, coming from the hedge fund world, I'm very used to sitting across the table from someone and they're asking me, there's a million funds in the world, why are you best in the world at what you do? And with venture, I just didn't have any answer at the time. So I thought, okay, well, let me do something that no one wants to do. And no one wants to be, or at least no one wanted to be in crypto to make whatever 20% a year, which to a normal human being sounds insane, but that is what crypto is. So I thought, okay, well, no one wants to bother with the operational complexity of DeFi to earn those, steady 10, 20, whatever percent a year. And I realized that presents an opportunity because if you can come with a TradFi, risk management pedigree, with that mindset, with that expertise, and have a fully institutional setup, which is contradictory to what the spirit of DeFi is, then, we my team and I, we've been calling ourselves responsible degens all these years because you want to be, you bring the best of the risk management world and the best of the, the DeFi native world. And finally, I realized that if we execute this DeFi strategy well, we can be very well positioned within the whole industry because DeFi, it's a peer-to-peer universe where the role of a capital provider is outsourced and there aren't any banks to step in. So I thought, well, if we do it, we basically become like the bank of DeFi. And that's pretty much where we are today.
So what was the specific, or maybe there wasn't one specific catalyst or one tipping point, but what was the kind of deciding factor for you to leave TradFi? Because again, like a lot of folks I talked to on the pod, they could have really stellar careers in TradFi And to lead that was back then a big risk. I think now it's de-risked heavily, but back then it was still like your colleagues must have been like, dude, what are you doing? So what was that tipping point?
Yeah, when I spoke to my colleagues and my bosses, they thought I was an idiot. But um, honestly, it it wasn't a well thought out decision. At some point, when you play with something, you might just have an idea hit you. And the idea that hit me was, oh my God, this DeFi, like it looks like it's real. And actually, I'm playing with these coins, I'm moving stuff around. Actually, a stablecoin yield fund sounds like an insane, basically a no-brainer, insane risk return profile because, you can do like whatever, 30, 40% market neutral at the time. And well, the risk is basically very, very low. It's not zero, but it's very low. And a real idea that hits you is like a bug and you can't get it out of your system. And then basically it was at a point where I realized that, well, I really feel this is the right thing to do. And then, Bezos has a good quote on this. He's saying, I'm trying to minimize regret. So I thought, it's an insane risk. It was extremely scary. Like you couldn't sleep before I resigned because it was that scary. But it was like, what will I regret more? And it was very clear to me that, I will definitely regret not trying. So once I got to the point, it wasn't even a choice anymore. It was just something I had to do no matter what. And like once you cross that mental point of no return, then you just don't look back. But ultimately, I have a lot of TradFi friends asking whether they should jump into crypto and what have you. And I tell them, listen, taking risk is a very irrational decision because the smart thing to do is live a comfortable 9 to 5 life, have a, medical insurance and a stable job. And you should only take more risk with your life if you feel that you must. If you don't feel that urge, then just chill, enjoy your life, and be happy.
No, don't encourage them, Evgeny. We need more alpha. But don't tell them to come in. So was there a specific, or has your thesis, the investment thesis, evolved from when you started to today? Because I know when you started with, I believe, one strategy. Now you have multitude of strategies. So has that a thesis evolved, or from day one you're like, actually, we want to build this full stack eventually?
So I had no idea and no clarity where this whole thing might go. All I had was DeFi makes sense, stablecoin yield makes sense, and it's kind of structurally right positioning to become the provider of liquidity for the whole industry. But I didn't know where it was going to go. And, as you pointed out, doing, whatever, 20% of the year, it's very, very nice. But unless you're running, a gazillion dollars, that doesn't really, it's not that exciting. So from day one, I knew that this would allow me to put my foot in the door. And the bet was that by the time the foot is in the door, I'll figure out next things to do. And so I always knew it would be a first stepping stone, but I didn't know what the second step would be. And then, yes, we gradually added, more products, more strategies to build out the whole ecosystem around V7. But it wasn't obvious at the time.
Very cool. Okay, I want to talk about a few of the strategies, starting with the DeFi yield. So is DeFi yield, is that purely stable coins, or is there a BTC yield, or is there some market making? Tell me all about the DeFi yield strategy.
Well, yeah, DeFi yield, kind of zooming out before we talk about specific coins or what have you, it's a structural service that needs to be provided to the industry and to the ecosystem, right? What is the role historically that banks and prime brokers and other types of financial institutions, what is the role they provide in the global economy? They make sure that, blood goes through the veins. They make sure that everything flows. They provide credit, they provide liquidity. And, 2008 was a crisis of confidence, crisis of credit, as most things are. But in DeFi, you have this purely digital, fully isolated digital economy. And you don't have banks. So you need a quasi bank to basically step in and perform the role. So what we do, frankly, is no different to what the banks have been doing in the traditional world for a million years. Hopefully it's just done, with lower cost and more efficiency and all the bells and whistles that blockchain has to offer. And yeah, we're, when someone needs a loan, it's our job to provide it. When someone needs, a market maker to make the market in DeFi, that's our job. And obviously some things are more esoteric and more sophisticated, but at a basic level, we're the provider of the liquidity to this digital economy. And And then to answer your question about the coins, then yeah, you can do this with different types of coins and you can structure different types of risk return. We chose to be fully market neutral, to have none of that anxiety and basically have a very sustainable business, because in a hyper volatile market, it's very, very hard to, like in my mind, if you're doing investments in crypto as a portfolio manager, as you're running an investment business, you either need to have a capital that's locked up, like a venture fund, or you need to be in market neutral. And these are the foundations to your business. On top of those, you can build other things. But the question was, okay, well, let's say we get into a bear market and the market is down 90%. Will I have enough cash to pay my tea? And it's much easier to do it if you have a market neutral yield strategy rather than a volatile one.
That makes a ton of sense. Okay, so within this DeFi yield, you said like kind of the DeFi bank concept. I don't know if you can talk about it, but which strategy or sub-strategy within that, can you kind of talk a little bit about those, whether it be like stables? A stable strategy makes up 50% of that bucket. And then, we do Aave with this bucket, or, can you talk a little bit about that?
Yeah, the reality is that we think about it a little bit differently. Because the main challenge for me coming from TradFi into DeFi was, what is the risk that you take in DeFi? Well, you take smart contract risk, you take the risk of hacks. And then what the hell do I know about assessing, security risk of code? So with that, what my team and I have done, we've built a risk management framework where we built a risk rating system where we analyze all these platforms and we say you're AAA to be CCC with a view to manage the risk. And that in turn tells us where the capital goes. So in the traditional financial world, you're like, okay, I'm going to be in Europe, in the US, in Canada, whatever, and you think you're diversified. But when there's a global recession, correlation goes to 1. DeFi works a little bit differently, because if I'm in platform number 1 and it blows up because of the security incident, platform number 2 will be perfectly fine as long as the code is different. So we don't try to go, okay, let's do lending, let's do market making, let's do this, let's do that. We look at individual platforms and isolated risks that they provide and build an extremely diversified portfolio. In general, when we kind of zoom out, there are, probably the main strategy is deploying liquidity into AMMs, into automated market making pools, which is basically become a market maker in a very simplistic way. And you collect trading fees, and then obviously, as we know, there are bonus points, and platforms subsidize them kind of as they rent your liquidity. So that's kind of number 1. Over collateralized lending, whether it's Aave, Morpho, is obviously an important thing that and very the biggest category that exists in the space. You can do some funky, by DeFi standards, they're not funky anymore, but you can do funkier things with platforms like Pendle, where you can basically do like interest rate swaps in a way. Those types of things. We have a lot of bespoke arrangements with quite a few projects where we negotiate kind of direct deals and support them a lot in the background as well. So it's going to be a very multi-dimensional portfolio. And when I look back at what it was, 4 years ago, it's like night and day. But the underlying core principles remain the same. Basically, there is this market of DeFi businesses, fintech apps, effectively, and they all need to run liquidity. And we're, an institutional player whom they can work with.
Makes total sense. Okay, so the DeFi ratings, or kind of these the AAA, the BBB, et cetera. How are you guys making that assessment? Are you guys hiring smart contract engineers and developers in order to audit that code, and then doing a whole bunch of other kind of assessments there in order to develop those ratings? Or I guess like what goes into a AAA versus like an A, or even like a C, or maybe a double C or something?
Yeah, that's a great question. And the inspiration for this was when you read an audit report, because obviously every legitimate platform is audited, right? And in the traditional world, you read an audit report of any public listed company, not any but legitimate ones. You read it and it basically tells you, it's all great, and you can relax. The security reports that we have in DeFi, they can tell you something is red if it's horrible, or you can tell you something is not red. That's basically what they tell you. But if something isn't red, is it the yellow? Is it the green? You don't know. And looking at red and saying, I'm not going to touch it, that's the easy part. It's looking at the other stuff and understanding, is it, dark yellow or light green? That's the complexity. So we've developed our own system where, yeah, we have smart contract expertise in house. We leverage external expertise as well, and we basically build a probabilistic system where we're trying to assess, is this more or less green? And that's basically what it is, because there is nothing you can look at in DeFi and say, I will give you 100% guarantee it will never get hacked. It's just like, you can't do that. So on the back of that, you need to accept that there are known unknowns and there are unknown unknowns. And unknown unknowns are representation of your, limited understanding of this world, because it's so new, then you can't pretend to understand it fully, because no one does. And then the way how you protect from your ignorance is by being diversified. So the way how we think about it is, we have a lot of tooling, we have a lot of real-time monitoring systems, end. But ultimately, when I go to sleep, I want to know that no matter what blows up in the world, I should be up for the year. And that's the only way to stay sane in this 24/7 market where, like at 1 a.m. on a Saturday night, you get an automated call telling you like something is blowing up, and you're like, oh my God, just like give you one weekend.
So, okay, so I guess I guess you're not fighting back against that, but building off that a little bit, as an LP, can I decide, hey, Evgeny, I actually want you to allocate for me with my LP dollars, like to single Bs or double Bs, and get a little more risky there? Or is it fully managed by you and you're saying, no, like we're gonna decide how this is formulated, this DeFi yield bucket?
So yes and no. So when it comes to the DeFi yield fund that we run, it's one pot of capital. And the reality is that this expertise, as you can imagine, is extremely specialized. So if there is someone in the world who will say, well, I want to work with you, but I think I can do a better job of doing my own security risk assessment, then they don't need us. They can go and do it themselves. But it frankly doesn't make any sense. And also, something that I learned a long time ago in TradFi is, when you start chasing yield, that's when you blow up. So I remember very well the days of low interest rates, and you have your average bonds doing 3%, and people wanted 8%, and they would go into Chinese real estate development companies and go into those bonds, and they to make 8%, and then everything blows up. So we tell people, listen, like, we're doing it in a way where we can sleep at night, where the average rating is like whatever AA, and where there's a metric in DeFi, per year a bit of money is lost to hacks. Our loss ratio is 20x lower than that through our process. And then allowing someone to go into the risky stuff and then just tarnishing our name just doesn't make any sense. Having said that, we now run some vaults, which are basically robo-advisory style solutions. And there you can come and pick your own risk return profile, but that's outside of the fund and the investment management business.
Interesting. So in these vaults, are these like morpho vaults, or like kind of you're like an active curator there?
Yeah. So we have a sister company called Re7 Labs, where we are an active curator of the lending risk and the risk-taking risk within DeFi. And these are like, you can think of as like robo-advisory mini apps in a way. And then people can choose anything within risk return profile that they like, but it's their choice and it's their responsibility.
Very cool. Yeah, I want to dive more into Re7 Labs shortly, but before going on to that, have you considered any BTC yield strategies? I've spoken to a lot of managers that are really excited about the BTC dominated strategies. And I myself am a Bitcoin kind of, I love Bitcoin, so I want more Bitcoin. So that appeals to me. But yeah, what are your thoughts around BTC denominated strats?
Yeah. So obviously there's a lot of stuff you can do with BTC within CeFi. And you could have done it for a long time. But CeFi is not what we specialize in. We specialize in DeFi. And up until recently, we've been consistently saying no, because we believed that you can't create a diversified enough portfolio. And we didn't want to take capital for the sake of taking capital, putting it into like two places, exposing you to massive extinction risk and collecting fees. But with the emergence of BTC DeFi, as it's called, the investable universe has expanded, and we're actually going to launch a BTC yield strategy within DeFi like very, very soon.
Very cool. Okay, so can I ask you a question around what chain is that operating on? Is that operating on Ethereum and it's just a wrapped BTC, or which?
Yeah, so it will always be diversified, right? So again, we even in our yield fund, we with stable coins. Ethereum is a big part of it, but we will always be diversified. So you have a lot to choose from, right? You can have, like Tech on Ton has some BTC vaults. You can do obviously, Base with CBBTC. You can do some stuff with BTC on Starknet, and you'll be able to do even more. You can do, Bob, Lombard. There's lots to choose from. So we believe that, I sincerely believe that a liquid fund manager needs to have a very different mind from a venture manager. Because the way how I understand the job of a venture fund manager is you need to take insane amount of risk to get a 1000x in one of your positions, roughly speaking. My job when I'm pursuing 20% a year is to not lose money. So my job is to be a risk manager, and your job is to be a scout to find the next whatever Elon Musk, but without the drama kind of thing. And when you're managing risk, a core principle of that is diversification, right? And that's why we're only starting to do it now, because historically we don't believe you could have achieved substantial level of diversification, and now you can.
I'm super happy you mentioned that, because when you were saying diversification, I thought you were meaning diversification as in, different DeFi protocols, but on the same chain. You're talking about different DeFi protocols on different chains as well. So it's diversification on top of much more diversification, and that greatly reduces your smart contract risk, because if something very traumatic happens on one chain, it doesn't affect all the other positions.
Exactly. So when you're doing anything in DeFi, you take 3 layers of risk: the asset that you're holding, whether it's a stable coin or whatever, the platform you're interacting with, and the chain it is on. And it's very easy to forget about the first and the third, but it's like insurance. You don't care about it until you do. And I don't know if you remember what happened with the Phantom chain, where the whole chain basically relied on one bridge, and something horrible happened to the people who were running it, and the chain evaporated. So I had like 100 USDC personally sitting in the wallet on that chain, and now it's worth 5 cents on the dollar basically. So you need to be diversified at the chain level.
So portfolio construction, obviously we're talking about diversification, but can you provide any more color into the portfolio construction here? Like, does a portfolio contain all AAAs across different chains and different protocols? And do you not even allow Bs, or how is that structured?
So it's a great question. So we're not in the business of avoiding risk. We're in the business of taking risk, but calculated and hopefully manageable risk, right? Because if my intention is to be in, like, what is AAA? Let's say Aave is AAA, right? For example, Morpho is AAA. Okay, great. If you put all of your capital in there, well, firstly, it's not a good idea anyway, because you can't be in one place. But even if you are, then you make it 5%, 7%. And then why should anyone give you capital, right? So the reality is that you need to construct a portfolio. There's nothing wrong with having a triple B. What is the wrong thing to do is to lose, 10% when the triple B thing blows up, but losing maybe 1% is okay. So our average rating is kind of AA minus. That's kind of the average, and obviously it's a bit, subjective, but that's kind of the thing. So we don't want to be AAA because, well, there are maybe 5 platforms that you can call AAA, if that, and I don't want to have 20% in the platform, even if it's AAA. So yeah, we're okay taking risk. It just needs to be managed and diversified.
When you're assessing a specific protocol, how does it become obvious? Like, after doing a deep dive, does it become very obvious that that protocol is flawed, or alternatively, oh, this protocol is incredible, we love it, or is it more nuanced than that?
It's always like 50 shades of gray, right? It's always nuanced. But there are some things when you look at it and you're like, I'm never going to touch this. And that becomes immediately clear in most cases. And it's not because you're saying it will definitely get hacked, but you're like, I just don't want to even touch it. You look at something else and you're like, oh my God, this is very, very good. Documentation is amazing. Doesn't mean it's AAA, but that's something I can work with. And what people also don't fully appreciate is, in an ideal world, you want to analyze absolutely everything, and you see the whole world and you make very smart decisions. Life is much more inefficient, obviously, And when I started this firm, I started alone, kind of running around and saying, "Hey, I'm in DeFi, please talk to me." Now we're about 30 people in the company. And now we're at the point where we get on average 5+ inbound liquidity requests per day.
That's insane. 5 per day.
Where a friend from a venture fund says, "Hey, we're looking at this platform, please talk to them." Someone says, "Hey, we spoke a year ago, we're now raising liquidity," and so on and so forth. We don't have capacity, and no one has capacity to do that. So therefore, we're in the business of filtering, right? So then if I'm scanning something and I'm like, "Oh my God, this is just horrible," deprioritize. We read something clean, well communicated, well documented, great. Then, they respect us because they put in time to communicate everything very clearly, and we will respect them back and do what we need to do, and give them our feedback. And
Yeah. So how important are these relationships with these founders of these different protocols? Does, I would imagine you don't deploy into any protocol or chain or whatnot before talking to the team.
Absolutely. And the exception would be something like a Uniswap, right? I don't think I talk to Uniswap to deploy, but generally yes, because people are still people, right? And smart contracts are smart contracts, but people write them. So, and assessing people is very important. So it's important to look people in the eye. If someone is refusing to switch on their camera in this day and age, it's a little bit weird. I've had a situation where it was a platform quite well known at the time. The code was clean, no issues. I mean, some risks, but nothing horrible. And then I did a call with the guy, and he used a voice augmentator. And I'm like, what is that? And we're like, okay, we had a polite call, but that was it. And 2 weeks later, they got hacked. It's not. I'm not saying it's because he was using a voice modulator, but we're looking for signals to avoid things. It's like you're interviewing someone, and they come in and I don't know, like they just don't care, or you look for signals to avoid something horrible. And in a world where you don't have enough capacity to look at every single thing in the world, you just have to filter.
Totally. I mean, with venture, it's like you're looking for a reason to not do the deal.
Exactly.
Of course. So it's very, very similar to your process, it sounds like. So for within this DeFi yield bucket, what are the average hold periods? Or should I not even think about, is it not really hold period centric? Is it more of like, is it a different kind of mindset versus like buying and holding a position?
Yes, like imagine you go into a bank and you put money on the deposits. And then, for as long as the deposit rate is attractive and the bank is solvent, you'll just be very happy. But if tomorrow your yield goes down because they're saying we're cutting the bonus program, then you'll move somewhere else. So in an ideal world, I want to be lazy. I don't want to move any money around. And if I go somewhere, if they can offer me the same level of risk and the same level of return forever, well, great. I just found the perfect place. Life is a bit more complex. So I think on average, probably 3 months is the average for us. We have some positions which we have not touched in probably 2 years. And we've had some where we had to cut them in a few days because, we make some, because the yield obviously is not guaranteed, right? I mean, sometimes there is, but more often than not, it's not. So you have to take a forward-looking view on what the yield is going to be. And sometimes you'll be right, sometimes you'll be wrong. But these days, if we can't keep our capital in one place for at least a month and a half or 2, it's not worth the effort.
I can only think operationally the headaches that you've gone through in order to set up the infrastructure just to operate this firm. Like, what is it? Do you have to build custom infrastructure, or are your fund administrators, are they tearing their hair out every day, or like how does it work?
We built, we're working with pretty sophisticated custodial setups where myself as a founder, even if I want to do something bad, I can't because it's set up in a pretty bulletproof way. Plus a lot of customized and in-house built infrastructure, which includes, transaction management, transaction scanning, alerts, yield tracking, and a million other things. And it was a pretty serious endeavor.
Would you say that your operational infrastructure in terms of like just accounting and tracking, because that's an issue for us, and we do, some liquid, but primarily venture, that I'm like, man, that's difficult even for us. So I can only imagine. Would you say that you're satisfied with the infrastructure that you guys built today? Or are you, thinking that, no, we constantly need to evolve in order to stay up to date here?
Well, as a founder, you can never be satisfied with anything. So the reality that there is always room for improvement is a question of priorities, right? So if it does what it needs to do, and you can deploy your team resources to build something that adds value to the clients and to the rest of the firm, then it becomes a higher priority. But it's an ever evolving thing, because when I started this, we were 100% deployed on Ethereum. Currently, we're on 12 chains probably at any point in time, and some of them are EVM, some of them are not EVM. So that has much more complexity, and it will only get harder over time.
Wow. Okay. So that was the kind of the DeFi yield bucket. That's like the foundation of the firm, we can call it. Additionally, you launched the liquid venture strategy. Can you talk more about that strategy?
Yeah, absolutely. Once you're in the crypto world long enough, you start to categorize all these coins and put them into buckets, right? And you're like, okay, you have your gold, right, which is Bitcoin. You have your Nasdaq, which is Sol. You have your collectibles, which are NFTs, and then everything else is like everything else. And then within that everything else category, there's a lot of noise and confusion. But ultimately, and this is where a lot of TradFi people struggle to kind of categorize things, is all this not all, but most of these crypto tokens that exist, they basically represent quasi equity stakes in very young startups. And unfortunately, because the startups are very young, they have a lot of drama and operational volatility. And on top of it, they're listed, so it has twice the level of volatility. So I'm like, okay, well, there are smart venture people who come in on day one and they see these businesses, and that's great. Then this business, 3 years down the line, is going to have a token. At that point in time, is it a mature business? Well, no, it's a company that's 3 years old. So in the traditional world, if you buy into a business that's 3 years old, obviously I'm generalizing, it's like being a Series A, Series B investor. But in this world, it's liquid. So then in my mind, if I'm buying a Uniswap, is probably a very mature venture style investment. If I'm buying something that's 2 or 3 years old, it's a startup. It's still a startup. It's maybe a little bit more mature than when you come in, and therefore the upside is probably less aggressive, but the risk return is also different. So we realize that we can treat them as something in between long only equities like small cap stocks and venture. But more importantly, we're like, okay, we know all these apps because we work with them day in, day out. We have analyzed their product. We've analyzed their security. We analyzed their code. We know the team inside out. We've been working with them. We understand the roadmap, and. So probably we should have a good idea as to how to deploy into them. And then 2 years ago, we launched a liquid venture strategy investing in these liquid tokens, where it's a very opposite level of risk return from our first fund. So like in our first fund, you get like whatever 30% ish yield in an amazing year, and in a horrible year you don't lose money. And here, with a year and a half, you can achieve like a 4x return, and then you can lose 50% in the quarter, kind of thing. So very different risk return, but very synergetic, given that we're talking to all these people anyway. And yeah, that's been up and running. It's obviously been volatile, but there's a lot of upside in that category. Obviously, we just need a crypto market to do well beyond BTC.
Yeah. When you're looking at these different opportunities within that liquid venture fund, how do you go about token selection? Is it mostly around a thesis formation of, okay, Pendle is really good, and this new protocol that's launching their token, they their token is going to interact with, or is kind of similar to Pendle, therefore we think it's going to be this big? Or I guess, like, how are you deciding what tokens to deploy into?
Yeah, it's a mix of a lot of different things, but ultimately, okay, well, what needs to happen for this thing to 10x? And how realistic are these assumptions, right? And if you're investing into something like a pandemic, okay, great. Well, it's an existing business. It's doing very, very well. We like it because of ABC. It's a great team, and. Like, okay, well, yeah, DeFi market needs to do well. Yields need to go up, and they need to increase their TVL, and then you get to, metaphorically speaking, a 10x return. Okay, great. I'm happy with that. If you're looking at someone who's trying to copycat them, you're like, well, it's like someone saying, well, if I only get 1% of this 10, I'm going to be a multi-billion-dollar outcome. Well, usually people who say that don't get to do that, because getting that 1% is very, very hard. So we But that's only one part of the complexity. I frankly think that there is a much bigger problem that exists in the token market, and which forces people to change their mindset completely. And that is, in the traditional world, there is this concept of fair value. So if there is a business that's listed, and I can buy it on the stock exchange for 100, and I can take control and I can liquidate it, and I'll make $200 because I'll sell the factories and the whatever, then it's basically free arbitrage. And those capital markets are highly, highly efficient. So if tomorrow there is a crash, Coca-Cola cannot go down 99% as a stock because someone will buy it way before then and take it over and. In crypto, what are you going to buy? You're going to buy what? A token that belongs to some people who sit at Discord, and you're going to buy open source IP, and then 3 engineers, one of them is retired in Miami, and the other 2 are like anon. So therefore, there's no floor to the market. And this means there is consistent reliance on capital flows. And that's the problem, right? That's where everything is so volatile. And then you're like, okay, well, who's going to be buying this, right? And you have, a few categories. You can say, well, institutions, they're clearly buying BTC and they're happy. Now they can buy Circle. Soon they'll be able to buy, they can buy Coinbase, they can buy Kraken soon and whatever. Do they really want to bother by going and looking at some small cap token? I don't think so. Then you have other liquid funds. It's a few people like us who've been like beaten by the market so many times they're numb. And it's not like they're getting crazy inflows. And then there's the crypto degens, crypto retail, and they've been beaten down so many times that it is crazy. And then the last category, which is the important one, are the projects themselves, right? The ones that generate cash flow, and they use the cash flow to buy back the token. So then you're like, okay, well, if I'm looking at project X, who's going to buy it from me and why? And then you need to have, okay, this needs to be a great business and someone needs to buy it. And it's very rare that you can find and on top of this, it should be able to outperform BTC. Now, when you do that, if you can find more than 10, I will, I'll lift my hat.
Wow. Okay. Yeah, no, it makes a lot of sense. All right. So when you're looking at these tokens, are you assessing the founders as you were in the kind of the yield fund, or is there a different process when you're kind of doing diligence on the founders?
We assess them even more, because if I'm deploying capital into a DeFi platform earning some yield, all I care about is that, was the founder good enough to build a secure platform? If I'm saying I want to bet on the growth of that platform, then he firstly had to make sure it was secure. But secondly, that founder needs to be amazing at like 25 different things, including scaling and go-to-market. And as we know, people who are good at writing code aren't necessarily the best at sales, and vice versa. So arguably the threshold is much, much higher.
And within this fund, how do you consider portfolio construction? Is it, 50-50 and something, are you deploying into a few positions or a few early stage kind of liquid venture positions, or how does that look?
Yeah, we tend to run a pretty concentrated book because again, it's just diversification can have negative effects as well when you're betting directionally. So we have about 10 names on average, and we're trying to go into businesses that have, reflexive upside when the industry does well, because, you need to eat a lot of vol as you're holding these things. And you have these relatively brief moments of, altcoin joy. And these things need to be rocket ships, because what we currently have is the problem of inflation. And inflation, very, very broadly, is there is constant dilution of the altcoin universe, because every single day, more tokens are going live. Every single day, more existing tokens are unlocking. And then every single day, we have like 2,000 meme coins that are being launched. So that dilutes, the supply demand of capital that exists, which just makes it a very, very high threshold. So therefore, we want to have a pretty concentrated position, so book with quite a few positions where we believe we know the teams very, very well, and we can see how, even though they can draw down like 50% in a week in a bad quarter, it's worth holding it through that pain, because if and when we get a positive market environment for altcoins, then these things could realistically 10, 20x in a matter of weeks, because we've seen that before in the previous cycles.
Okay, yeah. So touching base on that point with the kind of the reflexivity, is that based on, for example, a DEX token? Hey, we believe that more DEX users are going to come on board, and there's going to be more volumes. Therefore, the value should accrue more to this token, and it'll go up in price. Is that when you see reflexivity? Is that kind of the you're betting on like kind of that macro trend of more usage, or what is causing that token to increase in value during that period of time?
Yeah, that's a good question. So reflexivity, it means different things to different people. But as we know, crypto is a very funny thing, because let's say there's a DEX, right? And people are using it, and then the price of the token goes up. Or is the price going up for whatever reason, and then people actually start to use it? And it's usually the latter, as we know. So with that, we're just looking for things that can have that explosive upside. So I know we discussed Pendle briefly, right? So it's a platform where you can trade yield products, and the platform monetizes it in some shape or form. Well, we know that yields are higher in the bull market environment. So therefore, you can just have your bottom line in, let's say, Bitcoin doubles, and let's say it translates linearly into alts. Now, if Bitcoin doubles, alts, again, being very simplistic, alts do a 4x. In the world where alts do a 4x, your yield will go up 5x, and then your bottom line will go up 10x. That's kind of the thinking. So, is there inherent positive reflexivity to crypto cyclicality?
Makes sense. And then in terms of the holding periods within this vehicle or within this strategy versus the other strategy, I think the other strategy, the DeFi strategy, you said it was 3 months on average. With this, I would imagine is much longer, or is it not?
Yeah, exactly. So in our yield strategy, our fund has a monthly liquidity cycle. So our investors can come out once a month with no lockup. It's like basically putting money in a bank account, just with a bit more risk. In this fund, we have a 1-year lockup because we want to avoid tourists. And normally our holding period, desired holding period, is about 18 months. So if we don't think that a name can do well, or until the end of the cycle, whichever comes first. So if we don't believe it's a name we'll be comfortable holding for at least a year, maybe a little bit longer, it's not worth the effort trying to trade and speculate, because we don't believe anyone has an edge in doing short-term trading.
Do you think the 4-year cycle is still active? Is that still a thing?
Yes and no. Yes, in the sense that looking back, it's pretty clear it's not been about Bitcoin, it's been about global liquidity cycles. And that doesn't care about crypto. And those cycles are more or less intact. And you can kind of see it in the macro charts. With regards to, 4-year cycles where Bitcoin does this and then alts do that, that's clearly broken, because everyone knows that's how it goes. And therefore, it cannot be the same again. So I think it's still reasonable to expect cyclicality more or less within the same macro frameworks. But expecting that, Bitcoin will do well, it will correct, and then we'll have an alt season, that clearly is not going to happen, because, well, there are too many altcoins, right? It's just too much. So yeah, it's a tricky one.
What's your favorite indicator for tracking global liquidity? Is it like the M2, or what is your?
Macro indicators are very interesting because they're so well known that it's very easy to be dismissive, because, it's like everyone is looking at them every morning. So what alpha can you have there? But actually, they are very valuable. It's just difficult to keep looking at them every single day, and realize that sometimes you just need to stay, still for a long time. But yeah, global M2 is usually the cleanest way to look at it, and then you can adjust it here and there.
Very cool. All right, so I want to move on to RE7 Labs. So this entity, you mentioned that you guys curate vaults, which forgive my ignorance, but that's kind of a newer activity. Like I don't like that's kind of a new thing within the ecosystem. I feel like I don't remember there being any curators, or maybe they were actually called something different in the past. But can you tell me about this whole ecosystem of these protocols that offer the ability of these firms and entities to create curators that are effectively like the robo advisors?
Yep. So the easiest way to think about, if you think about the value stack of, let's say, a lending protocol in DeFi, right? So someone needs to build the code, and then someone needs to manage the risk. And historically, everything has been compressed into one team. What people have realized that, if you're great at writing code, it doesn't mean you're a great risk manager. So Morpho pioneered this concept a bit over a year ago, where they basically gave away the role of a risk manager, risk curator, whatever you want to call it, to the market. And we were kind of a launch partner for them alongside a couple of other firms. So it is a new concept, but at its essence, it's actually a very basic common sense idea that people should do what they're good at. Some people are great at building platforms and scaling them. Some people have the skill set of managing risk because they're finance people. And that was kind of the origin of this activity, and that was growing to be a very, very substantial business.
Yeah, what do you think about this convergence of CeFi and DeFi, where we're seeing kind of I think there was a collaboration with Coinbase and Morpho, where Morpho is enabling Coinbase users to get, I think, BTC backed loans. So like, how do you expect the ecosystem to evolve going forward? Because your specialty is DeFi, but is there, like, how is that looking forward 5 years, we'll call it? How is your business altered? Is it going to look more, you're going to have to get more CeFi integrations? Or do you think that CeFi is going to come over to DeFi and start plugging in there?
Yeah. So when I was just learning about fintech back in the day, someone told me that I should think of fintech as a front-end revolution in banking, where instead of having a horrible bank, you have a nice app and you click a few buttons. DeFi is a back-end revolution, right? It's instant settlement, global, blah, 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 right? 24/7. So the CeFi DeFi integration was just a matter of time. And then, you're a customer of Coinbase, you can borrow against your BTC, you can borrow stables, and your order is basically sent to Morpho on the base chain, and DeFi supply you with capital. That's the future, right? Shopify recently said you can pay with stables on base, and a lot of other things are happening, right? We have, Re7 Labs deployed BlackRock's, BUIDL tokenized fund within our vaults, and we have a lot of other cool things kind of happening in the pipeline. So with that in mind, if DeFi is the back end of CeFi, and we're kind of sitting in the background providing liquidity and kind of managing risk, then we should presumably grow alongside the ecosystem. And then obviously some CeFi platforms will come, some CeFi platforms you have to chase, but this convergence will keep happening. And, Stripe, right? I mean, they started buying out, stablecoin infrastructure left, right, and center. So I think fintech, CeFi, DeFi, 5 years from now will be very, very converged. It's like, let's talk about Robinhood. Would you call them a TradFi firm, or would you call them a CeFi firm? You can buy tokens or you can buy stocks. So it's basically the same thing now. And if and when they do something with DeFi, then, it's all going to merge.
Yeah, I guess building off that, do you expect, one of these fears I have that I always talk about is that TradFi is going to just kind of take over crypto in some sense, like, and we have the Coinbase stock, we have Circle stock, of course, and like that's getting all the attention, especially Circle right now, which is nuts. But like, I would love, it's not just like for my own bags, but just like for the ecosystem. I want my friends, the people that I know and that kind of grown up with in this ecosystem, to all do very well. And that requires the institutional buy-in and kind of the adoption from their side over to us. But it seems kind of like it's going the other way, where like we're going to them. And what scares me is it just going to be like the Robinhoods and like the JP Morgans of the world that end up like winning crypto, so to speak?
I think it's a classic problem. Like, you build something new and exciting, and then the question is, can you scale it up before, an elephant comes and just builds it internally themselves, right? That's a classic startup challenge. I'm not too worried about it because there's enough other stuff to be worried about. But I don't know, on a more serious note, I think it depends on what people do. So let's take Morpho as an example, right? So they built a lending marketplace on a couple of chains. They've achieved an integration into, a very like the leading CeFi player. So the way how it looks now is that CeFi could be a distribution channel for DeFi. Could there be another case study where someone has been trying to build a decentralized stablecoin, and then they've been killed by, a Circle or a Stripe, that will happen as well. So I think the key point is whatever people are building, I think the market is becoming more grown up and more ruthless. A few years ago, oh, it's a cool experiment. Let's pump $1 billion of TVL into this and like 10 billion market cap. Great. That's how it should be. But that's not how life works, right? So the question is, if you're building a product that's ultimately competing with, a bank, well, why do you think in 5 years you can achieve so much scale that they cannot kill you? Because let's say 5 years from now, they'll be here. Or just come and work with them, right? So I think it's the same in fintechs, right? Prior to blockchain, I spent a little bit of time with the fintech, in the fintech universe. It's like, hey, you're building this cool little thing, and eventually it can be replicated by 5 people in the engineering department at a large bank. But if you do a good job, then they'll just buy you up, kind of thing. But it's definitely becoming a grown-up competitive world.
Do you imagine going forward, you guys will launch, or I guess like, what are you excited about within the tokenization or like structured DeFi products realm or tokenization realm? Because, everyone talks about tokenization of all assets and whatnot, which, that is exciting. It's, we're far away from that, or, far-ish away from that, but that is going to eventually happen. But, you're super close to all these details. So what kind of products are you looking forward to either launching yourself or getting involved with? Or do you just want?
Yeah, when it comes to tokenized things specifically, frankly, that's something I'm still struggling with, because why should the building be tradable on chain 24/7? I don't get it. So I think the use cases need to be very, very precise, right? Is it potentially smarter to issue, a mortgage on a blockchain because it saves you a lot of costs? Yeah, 100%. Shouldn't be traded via a liquidity pool on Uniswap? Well, I'm not sure it needs to. So I never have a clear answer for tokenization, because I think for most firms that are doing tokenization right now, it's a marketing exercise. What I think, and my personal view, is that I think we'll have 2 DeFis in the future. We'll have 2 different worlds. So if you are, I don't know, a very large asset manager and I'm a very large bank, and we're trading with each other, then and we're trading something complex, like collateralized credit, like private credit portfolio, for example. Why do we need 1 million people in the back office and then paying fees to custodians and like a bunch of other people? Why can't we tokenize that thing? Metaphorically speaking, fork base, make it permissioned and KYC'd, and then trade between each other, paying basically 0 in fees. That I see a lot of value in. And then you do collateralization and other things. And then there will be this current world of DeFi, which is, degens and that sort of thing. Now, in that world, to me, it makes a lot of sense, because the old story of the blockchain that excited me, 11 years ago was, hey, use blockchain and then kill your middle and back office. Okay, well, that I can understand. When I was, in investments, and, I do a trade and then I have to speak to 5 people in the middle and back office only. To me, it never made any sense. But that's because the operations is, such a complex process. So that to me makes a lot of sense. Tokenizing a building and putting it on Aave, I don't understand that.
Yeah, it's like, like CeDeFi, like centralized DeFi is going to be a thing. And then like true DeFi will continue to be a thing. All right. So speaking of kind of the more true DeFi side, SocialFi, what are your thoughts around that? I know you guys launched something pretty cool there recently. Can you tell me all about kind of your thoughts around SocialFi?
Yeah. We were thinking, how can DeFi 10x as an industry? And, the BlackRocks and the Circles, that's obviously very clear. But, I think it's impossible for anyone to be in crypto and not be aware of the massive success of, public fund and those types of platforms, which to me, when I kind of zoom out, feels like a convergence of social media, virality experience, and the, gamification of finance that DeFi is very good at. So we started thinking that maybe this is the right time to have decentralized social, right? There's been a lot of experiments over the years and they've not really succeeded. But about a year and a half ago, I saw the early promises of success with the Farcaster. Then, and a bunch of conversation with Stani, who is building Lens, protocol, which we backed. I think it was last year or 2 years ago. Time is it. terms of concept. And okay, well, it is quite possible that everyone is looking at the BlackRocks of this world, but there's this other path where the growth might actually happen through the TikTok style experiences of this world and the social experiences. We built a frame about a year ago where, in the Farcaster, with one click, you could go into our morpho bolts, for example. And having that embedded finance in social media is something that we feel is quite powerful. So we basically wanted to bet on the success of platforms like Lens and the Farcaster, and then apps, people who are building on top of them. And in general, I feel that, crypto is very good at gamifying finance. So you take that and you take financialization of social media, there might be something there. It is a much higher risk than just saying, hey, let's buy Circle stock because it's great. But higher risk comes with higher asymmetry. So we wanted to make sure we don't miss out on the trend. And especially as we have convergence with kind of AI agents. A lot of existing AI agents are obviously purely meme coins, but and we spoke about this at length at some point, that this concept of AI girlfriend boyfriend kind of thing is where the future is clearly going to go. So having those AI personas, what's the best place for an AI girlfriend to be active? Well, it's blockchain based social media, right? And then I've got no idea how it all is going to come together, but we thought, well, let's deploy a very small venture fund to be kind of early tickets, no competition with any existing players, because we literally want to be a very small, but the first money in. And we'll close a couple of deals. So it's pretty exciting what you can see there. And crypto is very unpredictable. It always grows in a way which you don't expect. And we are just trying to cover all the bases.
I love that. Yeah. That actually goes to my next question, which is about alpha, because, we've seen the alpha has decayed dramatically from when we first started, but it was also kind of totally insane back in 17 and 18, et cetera. So what are your thoughts on alpha decay, specifically around kind of the DeFi world? Because I don't know, in theory, if there's only 10 really incredible DeFi protocols out there over the next 5 years, we'll call it, won't the returns and just the alpha kind of just compress dramatically over that period? Or what are you thinking on alpha decay?
Well, there are a couple of ways how this can be answered, right? So if we zoom out, I think it's perfectly reasonable to think of crypto as a sector, right? Like you have, 200 years ago, you should have been in railroads. And then there's alpha decay. Then you should be in, self-explanatory, right? So, are you going to get, if you buy a software stock today, will you get the same upside as you would have gotten if you bought Amazon back in the day? Well, of course not. So the sector is becoming more mature, which means the risk return profile is changing. The reality, however, is that we're very, very far away, and we're a very long way from that situation. The reality, the challenge that I see is not alpha decay, it's actually finding good projects. Because DeFi today is still very, very small. And even within the small world, we have had, as an industry, massively successful businesses being built. Aave, Morpho, Pendle, Ethena, and. And these are, multi-billion-dollar outcomes in a very short time span. And then you have projects that have had, issues and pain during the bear market, and now they're coming back stronger than before. Look at Makel, look at Euler, and, there are many other, even Pendle, and there are other examples of that. So will there be more things that will be launched and will be successful? Yes, absolutely. Is it going to be harder incrementally to get 100x return than in 2017? Well, obviously, but that's how it should be. And there will always be things that will surprise us. If we had this call a year ago, I would have told you we're starting to look at AI agents because it's interesting. Would I have ever expected that something like a Virtuous will go to whatever 6 billion FDV within a couple of months? Of course not. So there will be something new that will surprise you. And then when it comes to alpha decay and the DeFi yield, then frankly it doesn't exist, because our last year was a record year in terms of our P&L for the fund, even though DeFi is much more mature, because the DeFi yield is a function of supply demand for liquidity. And that is a function of how much capital is coming into the space versus how many platforms need the capital. And, there is a million new platforms being launched basically every year, and they all need capital. So for as long as there is this inefficiency of the capital market kind of supply demand in the DeFi world, then you will have outsized yields. And what's interesting is the risk is shrinking. So back in the day, DeFi hacks were left, right, and center every single day. These days, the kind of annual average default ratio in DeFi through hacks is less than 5%. So your risk has come down a lot. Your yield has come down as well, but it's still pretty attractive. And then what the future brings, obviously, no one knows.
And so LPs, what types of LPs are attracted to the different strategies that you guys are involved with? Or are they roughly the same?
It's a very broad spectrum, right? So let's say a DeFi yield strategy is, again, something that can yield you double-digit yields and not lose money when the market is horrible. That could be a fit for an extremely conservative family office. And that could be a fit for someone who is crypto native and is tired of the volatility. Or to a fund of funds, or to a venture capital fund who's looking to park some cash, or to a corporate treasury, or. When it comes to, venture is self-explanatory. And then when it comes to the liquid tokens, it's, again, a very broad range of things. Is it someone who's like, hey, I know how to buy BTC, but I don't know how to pick tokens? Or it's someone who's saying, hey, I've tried doing it myself. I can't do it anymore. Please do it for me. It's someone who's saying, hey, I'm building my strategic asset allocation to crypto, and I want to be in venture, I want to be in BTC, I want to be in the majors, and I want to be in kind of small cap tokens that you guys do. And it can also be someone who's saying, listen, I'm I'm a founder, I'm massively exposed to my own project, and I would just want to, basically use, 10% of that or whatever, and kind of swap it effectively into an actively managed portfolio because I just want to stay long, but I want to diversify my risk. Or it's someone who's saying, hey, I've been sitting on BTC for a while. I want to roll 5% of my BTC into alts. So there are many different reasons for people to do this.
So there's not roughly one category of LP. It's not like it's all the family offices that are in finance or all, pensions or whatever. It's pretty broad.
It's pretty broad. When we started, it was primarily kind of TradFi people who come from the hedge fund world. So they understand new asset classes. They don't understand DeFi, but they kind of see and smell alpha when they come across it. But now we've grown so big that it's a very broad universe, and I don't even know, all of our LPs at this point.
So yeah, speaking of the size, I think your team, you said, was roughly around 30 people now. When you're hiring, what do you look for? Because as you mentioned, this is a very specialized skill set. It's not like a regular, well, it depends on which firm or which strategy, but the DeFi yield fund, that's like you can't get a regular crypto analyst necessarily. It needs to be someone with specialized DeFi skills often. So when you're hiring for that fund, let's say, like, what are you looking for? Some in the trenches, young kid who has just been grinding for, a couple of years and, in it, or maybe someone from TradFi, or what is the ideal candidate for someone that you're hiring on the DeFi yield fund?
Yeah, it's a good question. So we try to keep a balanced approach because, it's important to have as you say, a kid from the trenches with 2 years of experience, because you want to keep that fresh mind. And at the same time, you want to have someone who spends, 5+ years in TradFi, has been in crypto personally or professionally, and they bring that level of maturity. And then you kind of build it as a well-rounded team. But yeah, it's become easier to hire because people know who we are and they want to work with us. It's become harder because our requirements are also getting more and more specialized. And kind of the thing is, like, DeFi has been around for like 5 years. So the number of people who have been in the space, who have 3 years of experience, who are clean, who can work in a team, it's actually quite a small number of people. And frankly, the most important thing, because everything can be learned with the exception of behaviors. So the most important thing, obviously apart from integrity, is passion and commitment. Because everything moves so fast. The world of venture in crypto moves extremely fast. The world of DeFi moves very, very fast. And if someone isn't truly passionate about it, they will not be able to keep up. So, the question I always ask everyone whom I interview is, are you willing to work 7 days a week? And it's a very honest question, because sometimes you have to work 7 days a week, and it's a lifestyle choice, and it's not for everyone. But it's stressful, right? You're like, oh my God, what if there is an ongoing attack? Like, oh, let me see what's going on. There's a suspicious transaction, and it eats at you. So it requires a special kind of person to manage that internal stress.
Yeah, I think I want to do there. Hopefully, someone will do some sort of study longer term or in the future on folks that maybe crypto fund managers or something like that. Because and especially liquid fund managers, just because it takes a special kind of personality to stay in this space for years and stomach the volatility, and the fact that it's 24/7 and there's hacks and risk of ruin is just like always always thinking about that. There has to be some sort of difference in the thought processes or even like brain structure of folks that have been doing this for 5+ years versus people that have not. You have to imagine there's something there. But anyhow, hopefully someone will. Hopefully Harvard will do that study.
It's still going to be a healthy report.
Yeah, yeah. All right. So, do you have any sort of like specialized data tools or products that you guys are using? Either you guys build it yourself, or of course you guys have the DeFi ratings, but anything else? Like, are you guys using like the TIE or Blockworks Research or any of these tools that you find really useful? I'm just wondering, because there's so many great tools out there, but there's almost too many, and I want to hear from you, like, what is actually useful in your day-to-day operations?
Well, there is data, and then there is intelligence, right? So yeah, we use Dune, we use Token Terminal, we use Artemis, like a bunch of other things, but that's easy. The hard part is converting that into an actionable signal. So we have an internal system which absorbed a lot of data from a lot of different sources. And then internally, we convert it into signals, into alerts, into intelligence. And we had to build it ourselves. And that's kind of on the data side. Then we need to plug in and connect directly into the smart contracts to source the yields and other analytics that's important for DeFi. We need to be plugged into smart contracts to get real-time alerts into DPEGs and other things that are happening. And last but not least, real-time smart contract security traceability. So it's a very tooling heavy, because as you correctly pointed out, that's the complexity of operating on the liquid side, because so many things can go wrong. And you just need to know in real time what's happening. So we had to build out a pretty sophisticated system in-house, because we can't go to one service provider who will give us everything. Because there are a lot of tools, but they're so specialized, because people have to specialize, that you just can't have a holistic solution just yet.
Man, I would love to take a peek of your infrastructure, because knowing our infrastructure, it's such a pain to do a trade or execute anything. And I just cannot imagine what it must be like for you guys. It would be, I would love to see it, but
it's a lot more pain.
Yeah, I bet. All right, Evgeny, what is the 10-year grand vision for RE7? Where are you? You're back in the pod 10 years from now. Where are you guys?
Our mission is to be the financiers of DeFi. We believe that DeFi will truly become, a backbone of global finance. And that will require kind of next generation level of a financier who can do old things in a new way. And that's where we want to be.
Amazing. I love that. All right, sir, it's time for the closing questions. Alrighty. Here's a fun one. If you had to pick one chain for all of your crypto activity to be on, whether it be you're suggesting this to portfolio companies, you say, hey, you have to build on this chain, or it's all your trading activity. Obviously, let's pretend the security is like top notch or whatnot, but which chain would you choose? And I'm just asking this because I'm curious about the usability, or which chain do you enjoy using?
That's so basically you put me in a position where 99% of people are going to hate me no matter what I say.
Exactly.
Yeah, that's honestly, it's an impossible question, because using means very different things, right? So when it comes to, let's say, consumer style, let's say I'm using it personally for fun, Um, things like, things like Starknet and Aptos are easy to use because they're very fast. Solana is great to use for obvious reasons. Base is amazing because I can use like Farcaster. Lens, I have to go on ZK, right? When it comes to DeFi liquidity provisioning, being very honest with you, everything outside of EVM is extremely painful. And within EVM, it's all pretty much the same. And then if I have to pick specifically kind of within EVM, I mean, Base is an obvious one. So to me, Solana and Base are obviously leading when it comes to go to market. And these days you have to go where the customer is, not where the tech is. And either way, frankly, to your point about transactions and pain, it's very, very painful to be doing DeFi because, UX is broken. You have to reconstruct the transaction. So frankly, people just need to sort that out before we can even talk about normal people using it.
Very diplomatic response. Very, very diplomatic. I like it.
Well, it's all painful and it's all horrible. so you have to pick the right spot.
I like it. All right. How has being an entrepreneur changed you as a person?
Probably accepting uncertainty. I had this illusion previously that smart people somehow understood life and they see a clear path. And when you become an entrepreneur, you don't see anything. It's like a fog and you have to run full speed in a fog. And at first it terrifies you. And then you realize, well, that's just life actually. And then you let go for the further things because you realize, well, no one knows what they're doing really. Everyone is figuring out as they go. And you get comfortable living within complete and total uncertainty.
I love that. All right. What is the most contrarian opinion that you have on crypto right now?
Well, that's a tricky one. I'm not sure it's contrarian, but it's a question I've been thinking about recently. And that is, in a world where a company like Circle can go and IPO and have a very successful outcome, what is the case for crypto tokens to exist? And always, there are obvious reasons, and blah, blah, blah. But if the world is now accepting of traditional capital markets now accept crypto, why bother with tokens and, and all the drama? And I think it's a question which most projects will not be able to answer.
Oh, that's really good. You were worried about answering the chain one. This is way more spicy. I like it. All right, last question. Which piece of content, whether it be a blog, a book, a podcast series, had a major impact on you?
Outside of crypto or within crypto?
Anything. Just it could be outside, inside.
So probably most impact was a book called The Financier by Theodore Dreiser, who is kind of a classic American author. Because having read that book when I was 16, I realized I wanted to be in finance. So that was probably, it's not a fair answer because I was just a kid. So it was easy to influence me. Now it's a little bit harder. But that's probably the most impactful thing I've experienced.
Is it a nonfiction or is it a fiction?
It's kind of semi-fiction. So it's a story of a guy. He was the guy who financed construction of the trams in Chicago. And then he was the guy who bankrolled creation of Underground in London.
Very cool.
So that's the prototype. That's the kind of the person, but the stories are fictional.
Very cool. Amazing. Evgeny, thank you so much, man. This is incredible. Where can people find more about yourself and learn more about RE7?
RE7.capital. And through that, you can find our, Twitter, LinkedIn, blog, newsletter, and all those things.
Amazing. Thank you, sir.
Thank you.